Hi everyone, welcome to another session of Fintech Saudi summer session. We are now on week 5, and week 5 is going to be talking about regulation, regtech and risk management. Ma, can you just check that you can hear me okay?
Hi Sagar, yeah, you're loud and clear. Thank you.
Excellent, thank you. So firstly, apologies. Nazar Haidar, who's the acting director for Fintech Saudi, was going to be taking this session. Unfortunately, he's not able to join us today, but I will be running through the information, which we're going to go information around this session. As ever, if you have any questions, please do write them in the Q&A, and we'll go through as many as we can at the end of this session. The other thing just housekeeping notes to note is that the internship program is now open for applications. So if you're not aware of the internship program, we will be sending a link to the internship site in the chat box so that you can start looking at how to apply for the internship program. And the summer sessions which you've been attending will count toward the accreditation for you in your application for the internship program. So that's something to think about as well. Right, so let's get on with it. Today, this session is about regulation, regtech, and risk management. Now, this is an area which is super important in financial services. It's an area which is probably underserved in financial services. But anybody who's doing anything in financial services needs to understand how regulations work, how is risk management. And there's a few reasons for that. So if we start with the first one, is that regulation is the financial services industry is a heavily regulated industry. Probably together with healthcare is the most regulated, heavily regulated industry. And there's a few reasons for that. Firstly, we want responsible actors dealing with our money, right? So we don't want anybody to go out and invest our money, to be responsible for looking after our money. You wouldn't trust your local shopkeeper, for example, to look after your money. You wouldn't trust your taxi driver to look after your money. You need responsible actors who have shown a level of credibility. And they do that by being compliant with the regulations. So it's important that the regulations only allows responsible actors to deal with money in the kingdom. So that's the first point. The second point is that it relates to maintaining financial stability. So financial services is regulated because we want to make sure, because it's so important for the whole economy, for the whole everything which happens in Saudi, that if there isn't a financial stability, if financial services is not regulated and leads to financial instability, that will then impact everything else which happens in the economy. So that's super important as well, is to maintain that financial stability. And finally, it's about trust. We leave our monies within a bank because we trust the bank will look after our money. If that trust is not there, then that leads to problems. That could lead to bank runs, that could lead to people leaving their money at home, not trusting how the financial industry works. But the fact that the financial services industry in Saudi is regulated and heavily regulated gives us a level of comfort, gives us a level of trust that when we are leaving our money somewhere, when we are saying that we want this payment to go from this person to this person, that is going to happen because the financial services industry has been regulated to the extent where that trust is embedded into the system. That's really important to understand of why financial services is a heavily regulated industry to begin with. It's also important to understand that there's two financial services regulators. So SAMA, the Saudi Central Bank, previously called the Saudi Monetary Authority, that was established in 1952. And Central Bank has two purposes. One is related to regulating the actual issuing and managing of banknotes. So as a central bank, they are ultimately responsible for the currency and the custodians of the currency. So they manage banknotes, they look at financial policy. But the other hat that the central bank wears is around regulation. It's around regulating and supervising the financial services companies which are involved in dealing with things such as banking, finance, insurance, credit bureaus, and payments. They also get involved in other things related to, say, monetary financial data, around providing banking services to the government, providing managing forex reserves, but it's all around managing that area of financial services. And historically, SAMA has been the main regulator. Now, in 2004, it was decided to set up the Capital Markets Authority as the second regulator. So the Capital Markets Authority was established to regulate specifically the Saudi Arabian capital markets and issuing rules and regulations related to the capital markets law. So the Capital Markets Authority is related to anything, regulates anything related to securities activities, to investment funds, to debt and equity instruments. So while SAMA looks after everything related to, say, banking, insurance, payments, finance, the Capital Markets Authority looks after everything related to your investments, your stock trading, anything related to online, anything related to the capital market is covered by the Capital Markets Authority. And they, again, have a huge number of responsibilities around regulating all the different companies related into the stock market and working in the capital markets. And historically, both regulators have really had to deal with a small number of large corporations. So Central Bank and the Capital Markets Authority, the companies which they tended to regulate it were big companies. They were well-established companies. They were companies which had spent a lot of time, a lot of investment, a lot of years in terms of getting their license, and they knew each other very well. There was a small handful of companies on either side which were regulated by SAMA and the CMA, and it was a very strong relationship. With SAMA understood those companies very well. Those companies understood SAMA very well. CMA regulated the authorized persons who were involved in dealing, arranging, managing, custody. And they knew those very well. And again, those companies knew the capital markets very well. What changed most recently is really related to Vision 2030. So Vision 2030, of course, has changed the direction or the focus for every industry within Saudi Arabia to meet the targets of Vision 2030. And these are some of the key targets which have been set out around setting up a cashless society, increasing household savings rates, improving the level of SMEs in the financial services industry, but also improving the level of services for SMEs. And what this has really led to, or a change in terms of the pivot, is to support the growth of fintech activity, both in terms of supporting innovation in financial services, which allows us to meet those targets, but also supporting the growth of SMEs in the financial services industry. So we're moving from a dynamic shift in the system of these regulators who are regulating very well-established large companies to then Vision 2030 actually creating these regulators becoming enablers to support the growth of more innovative companies, more disruptive companies, which want to change and improve financial services in the industry and regulating those companies specifically. Another part of this is really innovation is about changing new things, it's about doing things differently. And this has led to the growth of new technology, new business models. So this innovation is another area which is interesting from a regulator perspective, is how do we now regulate things around gamification? How do we regulate things around mobile first, around automation, around platform? And then not to mention all the different technologies that fintech companies, that innovation uses in financial services. So this becomes a big challenge from the regulator's perspective about getting all of this information together. And what the regulators quite quickly realized was that the old way of developing regulations in financial services didn't necessarily work. So the old way was very much that SAMA and CMA both have very strong regulation teams, and they will draft regulation on a specific topic that they think that needs to be regulated. They will release those regulations and they will monitor their compliance. That is typically how historically every regulator in financial services has developed the regulations. But the challenge with that right now is because we're seeing this innovation, we're seeing this technology, is that may not necessarily be the best way of releasing regulations into the marketplace. It may not take into account new business models or innovation which is happening in the marketplace. With technology changing so fast, by the time these regulations have been written, they may not actually fit all the different activities or the different circumstances that need to be regulated. And therefore, it creates a concern that the regulations may not cover all the risks. If there are new risks being developed related to technology, new business models, if the regulations written didn't think that those technology or those business models would develop, they wouldn't have included those in the regulations, and therefore those regulations may not cover all the risks. So what SAMA and CMA quickly realized was the old way of writing regulations, releasing those and monitoring compliance didn't necessarily work. And this led to the development of regulatory testing environments. Right? So this is something which started in the UK on the FCA and has been adopted by regulators across the world, including SAMA and CMA. A regulatory testing environment, in the case of Saudi Central Bank, it's the SAMA Regulatory Sandbox. In the case of the Capital Markets Authority, it's the CMA Fintech Lab. These sort of changed the way that regulations developed. So historically, you wrote the regulations, you released it, you monitored compliance. What these regulatory testing environments say is, well, actually, what we're going to do is we're going to allow innovative solutions to come into these environments, which are very well supervised by the regulators. And we're going to watch these companies. We're going to allow them to work with live testing individuals and live testing customers. But we are going to watch and supervise them very closely. We'll probably put limits on their transactions, limits on what they can do, but they will still be able to operate in a live environment. And by watching them, we will actually be able to understand and evaluate the risks of those businesses, the risks of those business models, that technology, and then write the regulations based on those risks. And that's typically how regulations have been developed for fintech activity in the kingdom. First, it's about evaluating the fintech activity. So the SAMA Sandbox opens a couple of times a year, and they will allow a cohort to work in a particular activity. The Fintech Lab is also open throughout the year, and they allow innovative activities to be accepted into the Fintech Lab and to be tested. And the regulators will have dedicated teams which will evaluate those fintech companies to make sure that look at how those fintech companies are operating, see what they like, see what needs to be looked at in terms of risk, look at what needs to change. And based on that, they will then draft and release regulations. So this means that the regulations are now a lot more current and fit for the actual activities which we are seeing in the marketplace, because they've been developed by looking and evaluating the fintech activities. So as they draft these regulations, what then tends to happen is that the companies which are within the sandbox or the Fintech Lab then have the opportunity to graduate from those testing environments and meet the full regulations. So if the full regulations will be released, the companies which were under the supervision of the regulatory testing environments will then comply with those new regulations, whatever those regulations are, and they will then graduate once they've got their license and the regulators are happy that they're complying with the full regulations. They will graduate from the regulatory testing environment. That then means that the regulatory testing environment is open to new activities, and then the cycle starts again. So they're open to other new activities where the regulations haven't been written yet. The regulators will then evaluate those activities, draft the regulations. Once those regulations are released, the fintechs related to those activities will graduate from the regulatory testing environments, and then new activities come in. And this is how SAMA and CMA have typically been developing the regulations. So things such as the payment law, which was released in 2020 by the Saudi Central Bank, that was developed by the first cohort of the regulatory sandbox, which included e-wallet providers like STC, like Hala, like Buy and Pay, where the central bank evaluated their activities and then drafted the payment service providers law, which those companies had now graduated and now they meet the full law. It was the same thing which was done with things such as consumer microfinancing, debt crowdfunding, and most recently, Buy Now, Pay Later has gone through that same process. What's currently being tested in the sandbox are digital saving associations and open banking, and we expect other new areas to be tested in that sandbox, but it will follow the same process as well, where the regulations will be written, and those areas will then graduate from the sandbox, comply with the full regulations, leaving the sandbox open to look at new innovative technology. The same happens on the capital market side. So the Fintech Lab is currently testing things such as robo-advisory, social trading, arranging securities using distributed ledger technologies, and micro-sukuk. And what is done for equity crowdfunding, which was previously in the Fintech Lab, is that the regulations are now being drafted and being released, which will then mean that equity crowdfunding will graduate from the Fintech Lab, and then anyone who wants to develop equity crowdfunding solutions will have the regulations in place, which they can then work towards. So that's really explaining how the regulatory testing environment works in the kingdom. There are now essentially 4 buckets of regulation that innovation in the kingdom falls into. And this is something which we discuss with all entrepreneurs, because fintech entrepreneurs come to us quite frequently as Fintech Saudi and say, well, how do I need to be regulated? Who do I need to be regulated by? What are my options to be regulated? And typically, every fintech company will fall into one of these buckets. I just want to explain these buckets in a bit more detail. So the first bucket is fintech solutions that do not need to be regulated. Now, this is because the fintech solution is conducting activities that are not under SAMA or CMA. So they're not conducting payment activities, they're not conducting banking activities, they're not conducting capital markets activities, they're doing other stuff. So they could be doing things around business tools. So accounting software, for example, doesn't need to be regulated by SAMA or CMA, but we have good accounting fintechs like Koyud and VOM operating in the marketplace, which are disrupting accounting solutions. Regtech is another area which we'll of course talk about in this session, but that doesn't necessarily, the Regtech solutions do not need to be regulated directly by SAMA and CMA. The reason for that is Regtech solutions are used by regulated companies. That is the essence of Regtech solutions, as we'll go on to. So because regulated companies are using Regtech solutions, that means that because those companies are already regulated, the actual solutions being used by those companies do not need to be regulated. If the company is not sure, so say the company has found this really good solution, a regulated company has found this really good solution that they love and they want to implement it, but it's something which is disruptive, something they're not sure about, how that changes things, they will themselves approach the regulator. So the bank, for example, which wants to use the solution, will go to SAMA and ask SAMA for non-objection certificate to say, hey, this is a great fintech company I've come across. This is a great solution. It will help our business doing X, Y, and Z. Are you happy for us to go ahead and proceed with that? And SAMA will then issue an NOC, which essentially tells the bank, this is your responsibility. We regulate you, and it's your responsibility to make sure you are using the solution in the correct way. And then it's very much the responsibility of the bank to make sure that it is taking that solution, it's considered all the risks related to that solution, because ultimately, if something goes wrong with that solution, they will be on the hook with the regulator. So that's with things like Regtech. And then we have things like reward-based crowdfunding. So reward-based crowdfunding is where there isn't actually a transfer of equity or debt. You essentially are giving you're funding a project, and in return, you might be given a gift. You might be given if say, for example, you're funding a book, then there might be a mention of you in the book. That's not an activity which is regulated by SAMA or CMA, but it does involve fintech activities, as it were. So that's another one which does not need to be regulated. The second bucket are activities implicitly or explicitly under the regulation of the CMA. So we've talked a bit about this already, but it's activities such as equity crowdfunding, robo-advisory, asset-backed tokenization, anything related to the capital markets would be under the CMA's jurisdiction. So any activities which look and feel like they're working with the capital markets would be under the CMA's jurisdiction. Now, if the regulations have been released, so for example, investment brokering, where you could do stock trading, there is clear regulations for how you become an investment broker in the kingdom. You would then, if you're developing an investment brokering solution, go and follow those regulated activities. You'd follow that license rules, you'd apply for the regulation as an investment broker, meet all the criteria, you'd be given the license if you consider responsible enough, and you can conduct your activities. Now, if there are activities where the regulations haven't been written, then you would be going to the regulatory testing environment that we discussed, like the FinTech Lab, for things such as asset-backed tokenization or social trading, where the regulations haven't been written. SAMA operates in a very similar way. So again, SAMA, it's the bucket of activities SAMA looks after is anything under the central bank jurisdiction. So insurance, payments, finance, banking, all of that covers under SAMA. Where the regulations have been written, and a fintech is conducting an activity where the regulations have been released, such as payments or debt crowdfunding, they would then apply directly to those regulations. They would have to meet the criteria of that regulation. They would then be given their license and they can start operating. If the company is involved in activities that are under SAMA's jurisdiction, but the regulations have not been written, such as open banking, for example, they would then be eligible to go into the SAMA regulatory sandbox, and we would go through that process which we discussed, where SAMA would evaluate those solutions, draft the regulations, release the regulations, and then those companies would graduate from the sandbox. So that's a Saudi central bucket. The final bucket is the activities which are prohibited by SAMA, explicitly prohibited by either SAMA or CMA. Currently, cryptocurrency trading falls into that bucket. So they're the 4 buckets which all fintech activity needs to look at, but there are also other regulations that fintechs need to comply with. As we said, this is a very heavily regulated environment, and because you're dealing with people's money, and that's a very sensitive issue, there are other regulations that fintech companies, that companies involved in financial services need to comply with. Firstly, we have anti-money laundering and counter-financing terrorism laws. We then also have cybersecurity guidelines. So this is really important, where the NCA, the National Cybersecurity Authority, they release their own cybersecurity guidelines, but SAMA and CMA also have their own cybersecurity guidelines as well. Meeting around cybersecurity, making sure the right processes are in there to stop data being hacked, making sure that it avoids any collusion of any data. Cybersecurity guidelines are becoming more and more important because technology is becoming more and more important, and the use of technology is becoming more important. Another area of regulations is around data residency and cloud computing. So one strong area around in Saudi Arabia in particular is, where is the data for those individuals kept? Sensitive data needs to be kept within the kingdom. So that's an important factor that financial services companies need to take into account. That data residency has to be kept within the kingdom. And cloud computing, of course, is something which fintech and financial services companies can use, but again, they need to be able to separate and have data residency. So sensitive data stays within the kingdom, whilst non-sensitive data can be stored on other clouds. SAMA and CMA also have fit and proper rules. So it's really important that in key positions within financial services companies which are regulated, that they have the right level of experience. You wouldn't want somebody who's a very junior person to be head of compliance of a larger bank. So SAMA and CMA have these fit and proper rules to make sure that people which are being hired are fit and proper for the positions that they're being hired for. So things such as the head of HR, the head of compliance, these have to have certain criteria around meeting certain level of experience, certain level of work activity, so that SAMA and CMA can be confident that the individuals which are head of these important areas within the regulated entities have got the experience to act in those areas. And as we mentioned, that there are other actors involved as well. So groups like MISA, Ministry of Commerce, the MCIT, they all have their own regulations depending on activities, and financial services companies and fintechs would need to look at complying with those as well. So that's just giving you a super quick overview of regulations, which is happening, how regulations are developed, who the regulators are in the kingdom. Now let's talk a little bit about Regtech and supervision tech and what these really mean. Let's start with the definitions of Regtech and subtech. So essentially, Regtech and subtech are two sides of the same coin. Regtech or regulation technology is a use of technology to support regulated companies to comply with regulations. So these are companies such as banks or capital markets companies or finance companies, which have been regulated by SAMA or CMA. They need to continue to comply with regulations. They need to show that they are complying with different regulations. They need to be able to demonstrate that to the regulators on an ongoing basis. Regtech essentially allows them to use technology to comply with those regulations and show the regulators that they're complying. On the other side of things, supervision tech is around the use of technology to help regulators to ensure compliance with the regulation. So supervision tech is typically used by the likes in financial services, is used by the likes of SAMA and CMA to make sure that they can supervise effectively the companies under their jurisdiction. And this has become more and more important in most recent years, because as we discussed, this blow up of fintech has led to more companies under the supervision of SAMA and CMA. Because there are more companies there, unless SAMA and CMA want to hire a huge number of more staff, they have to look at using technology in order to supervise those companies effectively, because the manpower wouldn't be able to, and the bandwidth wouldn't be there to do it without the use of technology. Now, Regtech and subtech really has been around ever since technology and IT have been used by regulators and by companies to comply with regulation. But what we have seen is an acceleration since the financial crisis of 2008 and 2009. And the reason for that is the financial crisis led to some big holes in the financial services industry globally. Saudi was actually one of the most immune from the financial services crisis, and that's because Saudi entities have been very, very well regulated. But globally, the financial crisis showed that there were some flaws, the serious flaws within the financial services industry. And that led to a whole host of new regulations which have been released. Things such as GDPR, MiFID, AML, anti-money laundering requirements, post-crisis regulatory changes, BCB 239. These were all regulations that regulators had to come out in force after the financial crisis and say, this is how we are going to change things. We are going to become even more regulated than we were before. And what that means is there's two things for that. So firstly, it means that on the regulators, there's a higher demand on the actual regulators. So regulators around the world, now these regulations have been released, they need to comply, they need to monitor compliance with these new regulations. They've got to monitor more compliance with more regulations. That increases the amount of work which regulators need to do. At the same time, we also talked about the growth in fintech companies and non-financial services companies operating financial services activities. This means that they need to comply, the regulators need to supervise a larger number of companies, but also these companies don't necessarily have the same level of experience as in compliance as actors such as banks and insurance companies, which have been there for decades. So essentially, we've got more companies which need to be regulated by the regulator, and more of these companies essentially don't have the level of experience or the in-house teams which the traditional incumbents tend to have. So this has put a lot more demand on the regulators, and it led to things such as from a basic level, digitalizing records and reports, because otherwise, if it was a very paper-based system, then we would have warehouses and warehouses of this paper, which would just, from one perspective, be inefficient, huge cost, but also be extremely inefficient. So this leads to regulators having to look at new technology solutions to be able to supervise and regulate the companies that they're looking after. The second side of this is that there was an increased cost for regulated entities. So every time new regulations has been released, then regulated entities need to understand what those regulations are. They then need to build up the right processes and compliance for that regulation. And then there's ongoing compliance as well. So it's not just a one-off and you get your badge and well done, you've approved on the compliance. You need to show that you've got ongoing compliance and you're meeting those requirements or those regulations on a regular basis. And this has led to a huge cost for financial services companies. And these are just some stats or some surveys which have been done. So Deloitte released a survey and they found that the operating cost spent on compliance has increased by over 60% for retail banks and corporate banks. Also, the average cost of maintaining compliance can go up to $10,000 per employee. And 1 in 3 banks spend 5% of their revenue on compliance, which is a huge amount of money. The likes of JP Morgan will spend over $100 billion on compliance alone. That means that's a huge amount of money which is being spent in this area. And this has then driven the need to use technology, use innovation, which can help these companies to reduce the cost of their compliance while still maintaining and meeting the compliance requirements. So these two areas in particular led to the drive in innovation in Regtech and subtech. It led to it becoming a bigger pain point for regulators and bigger pain point for regulated companies. And that has led to the growth in regulation technology and supervision technology. These are some of the areas I just wanted to touch on where we have seen a growth in Regtech and subtech. So one is around customer risk management. So all companies have had to maintain their customers and look at and make sure that their customers are of a certain level of look at the risks, make sure that they are looked after, make sure that when they're that if there's any fraud, it's detected quickly, it's closed down quickly as well. So fintech solutions around Regtech and subtech have been around supporting financial institutions manage their customer risk better. This could be using things such as machine learning algorithms to spot potential fraud in data which is happening. It could be to look at predicting when customers are likely to go and to be a credit risk before you offering them a loan. That's around maintaining and managing the risk around your customer. There's also a part around managing customer onboarding. So when regulated entities take on new customers, they have a whole bunch of checks and balances that they need to fill in to make sure that they can say that the customers they've onboarded are the correct customer, that they're not involved in any, their money they're looking after is not from any illegal proceedings. And to do that, they need to be able to check the customers against different databases. They need to be able to look at collecting information from different ways to get a good profile of their customer. Again, Regtech, subtech solutions allow financial institutions to look at doing that. And then we also have around the regulation compliance. So the companies who need to look at complying with new regulations from SAMA or CMA, how can they do that more effectively? Well, there have been solutions which have been developed which allow the regulated entities to auto-read new regulations which come out. So you don't have to have someone sitting there reading thousands and thousands of pages. You can have a machine reading those pages to then pull out the key things that you need to comply with and then make sure that the systems are in place to comply with that. Another big requirement from the regulators is regulators often ask regulated entities for new responses, for questions, for new pieces of data. Now, Regtech solutions, if they can build their data in the right way and have the right software management, they can automate the responses back to the regulators, which again reduces a huge amount of cost and time which it takes to respond back to the regulators. And from the supervision side, as we talked about, the subtech is around how can regulators and make sure that there's compliance with the regulations on a regular basis. This could be things such as using machine learning, AI, to look for areas with and identify non-compliance. It could be related to helping to automate parts of the authorization process, speed up responses that regulated companies might have to the regulator if they're asking certain questions about the regulations. It's about using technology to reduce the amount of time and expense that both the regulated entities, the banks, the insurance companies spend on having to comply with regulation, and also how much time the regulators have to spend on supervising those companies. That's really the essence of Regtech and subtech. Now, what we have seen is that this is not a small area. Regtech is a huge area. There's a huge amount of investment. There's a huge number of Regtech and subtech companies which are developing in this field. It should also be noted that whilst Regtech and subtech started within financial services, it is not applied only to financial services companies, to healthcare, to government, to environment, to education, any industry where there's an element of regulation. Regtech plays a role, and there's an element of a regulator to look at supervising the compliance to regulation. Subtech plays a role. So that's really important to understand, that Regtech and subtech isn't a subset of fintech activity as such. It started in fintech, but it is very much an extension and extends into any area which needs to be regulated. The other part of Regtech and subtech is that it's use of technology. So as we discussed in these examples, is using new technology such as AI, blockchain, machine learning to automate activities, to make things faster, to make things more progressive, and therefore reduce the time and the cost related to having to comply with regulations. And the other aspect of this is an area which is going to continue to grow. I believe that this is an area which is very underserved, and it's an area which will continue to grow as we see new regulations being released, as we're seeing more regulations being released. The compliance with those regulations will need to be met as well. So Regtech and subtech is here to stay, and is very much an area which we'll see growing both in financial services, but also outside of financial services. I just wanted to touch on one last slide before we can go on to the questions and Q&A. So one area which we get asked around is risk management. So Regtech and subtech is about improving risk management, or making sure risk management stays into place whilst not having to spend huge amounts of investment of time and resources onto that. But there are other areas which we are seeing a growth in terms of risk management that fintech companies need to look at. And I'm just going to run through these in just a little bit of pace. So firstly, technology audits. Fintech is about using more technology in financial services, using more technology to automate human processes, to remove the human error. But that means that we're now relying more on technology. So therefore, there is a huge need to look at, from a risk management perspective, look at technology orders, look at the underlying technology, and making sure the underlying technology which is being used is fit for purpose. And this isn't something that regulators tend to do in a lot of detail. It tends to be something which is pushed onto the companies, and in terms of the regulated entities, so the banks, the insurance companies, they will have teams which will conduct these technology audits. But this is something which is becoming more and more important for these companies to make sure that if they are giving more reliance to technology, that technology is fit for purpose for the activities which they're doing. Cybersecurity is a massive area of development in the kingdom and outside. The former governor of the Saudi central bank said the biggest risks to banks and the banking infrastructure is cybersecurity. This is something where we will continue to see more and more growth. As we get more reliant on technology, then there is more risk of cyber attacks to that technology, data hacking, fraud, phishing, and all of these things need to be prevented. So cybersecurity will have to continue as an investment area and a growth area to match the level of involvement and activity involving technology. Data governance is another big area. So Sadaya, which has been set up in Saudi, it's all about managing data. The Artificial Intelligence Authority is very much about promoting artificial intelligence, but in order to do that, the data protection laws need to be in place so that people are comfortable with that level of trust around using the data to improve things. So data governance and how data is governed in the kingdom, that's an area which you'll hear more and more about, and that's an area which will also continue to grow. Cross-border governance. So again, this is where some technology is borderless. So technology doesn't look at just Saudi as a market, doesn't just look at UAE as a market. Technology can move across borders and be used by companies which can be based in the UK, but looking to operate into the GCC or looking to operate in the US. So because technology is cross-border and innovation is cross-border, we need to look at more regulation on an international basis, which looks at regulating, giving the same standards of regulation in one market as another market. And this is to prevent market failures or prevent certain companies setting up in one jurisdiction, which may be a little bit easier to set up and they may be more laxed in regulation, and then operating from that jurisdiction into other jurisdictions. So this is another area which the regulators are heavily looking at with their counterparts across the world, is to make sure we have a level of governance across for innovation for fintech companies to avoid that from happening, to avoid certain jurisdictions coming out and setting up lax regulation, which then leads us to lax players coming into the financial services industry. The other area which we need to look at is competition management. So competition management is really, we've got very big companies, big tech companies. We've got big incumbents. We've got big companies from telcos, which are all going into this fintech industry, going into the fintech market. But how does that impact the startups? How does that impact the smaller companies? You may have heard recently that Apple is moving into buy now, pay later. Now that's great news in terms of the infrastructure and user experience, but what does that mean for the buy now, pay later fintech companies that were operating in the marketplace? How do they compete with the likes of Apple? So there has to be a level of competition development, competition management to avoid these industries or these companies dying overnight because a large incumbent has decided to include a new feature which makes the other companies redundant. That destroys innovation, that destroys progression, that destroys that progression in terms of new business models. So competition between the large actors who have the funds and the ability to create new features and the smaller startups which are more innovative but need the support has to be managed. And the final area which we're seeing a big growth in terms of risk management and regulation is ESG, environmental, social, and governance goals. All companies around the world, in Saudi and internationally, are looking at ESG requirements. They're looking at how they can comply better with environmental, social, and governance goals, how the business model practices impacts those areas as well. And that's something where I think we will see a lot more activity and risk management. So that's all I've got. I'm going through today. Thank you very much for listening. I hope this session has given you a good understanding of why financial services is a heavily regulated area, how the regulations are developed, and some of the key trends that you might be seeing now and in the future related to the regulations, Regtech and subtech. And now we have got some time for some questions. So Maha, do you want to, are there any questions you want to kick off with?
Yes, thank you, Sagar, for the session. So to start off, we have a question saying that, is it possible to see cryptocurrencies regulated in the future?
It's a really good question, and it's something we get, of course, asked a lot. We know that there's a lot of people in Saudi which trade cryptocurrencies. They use platforms internationally to trade cryptocurrency, even though SAMA has written a warning and released a warning saying that cryptocurrency trading is prohibited. Now, it's something where I think the regulators understand crypto. It's not the case that they've just sort of covered their ears and said, we don't want anything to do with cryptocurrency. They are very well versed in cryptocurrency and digital assets generally and how that works. I think the regulation which will come in should be to give the right balance between personal choice, but also make sure that there's responsibility actors in here. It goes back to the financial services industry being about responsible actors. Now, if you follow cryptocurrency, you will see the price of Bitcoin, for example, going from 60K down to 20K in a matter of months. And that to us is not necessarily responsible acting. There are players in there, there's actors in there, which are not necessarily acting in the best interest of customers. And that's one of the reasons why I think they've been hesitant to look at cryptocurrency for consumers. But the regulators have used cryptocurrency in the sense of CBDC, so central bank digital currencies has been used. There's a pilot program which the Saudi central bank has done with the UAE central bank to look at payments, cross-border payments using CBDCs. Banks in Saudi use Ripple as a network for payments. So there have been examples of case uses of using cryptocurrency in the right way, or digital currencies in the right way. And I think that will continue. And as we get more and more sort of infrastructure built around this area, then I think we will see more use cases being developed.
All right, thank you, Sagar. Another question would be, how often do regulations change and how long does it take regulators to approve the providers?
A great question. And it's something which all regulators are struggling with, right? Because historically, there wasn't much change in financial services. Financial services, if you look at how things were done 10 years ago, it was the same if it was 20 years ago or 30 years ago. There wasn't a huge amount of innovation which happened. It's only since probably the mid-2000s, 2010 onwards, 2012 onwards, where we have seen a growth in different levels of technology, different maturities of technology, new business models coming in, new innovation coming in. So regulators themselves are having to change the way that they work. And that's regulatory testing environments, the Sandbox, the Fintech Lab is part of that change of how they write regulations. Now, I think we will see going forward, regulations will need to change more frequently than they have in the past because we're seeing more innovation, more disruption. Things like buy now, pay later, for example, if you'd written some regulations around that 5 years ago, buy now, pay later, what didn't exist? Nobody knew what buy now, pay later was. It's only something which has come up in the last 2 years. So think about in 5 years' time, we'll be talking about concepts which we don't even know exist today. And the regulators are very much aware of this. So I think we will see more regulations changing more frequently to make sure that that responsibility around activities is maintained in the market.
All right, thank you. Another question would be, are the inputs in Regtech and subtech fed manually, or do they provide two-sided platforms accessed by both the regulator and the supervisor? And sorry, let me continue. And the supervised entities, and in that case, only established by the supervisor as a single platform for all entities. It's a heavy question.
It's a good question. I'm not going to cop out, but the answer to that is it's on a case-by-case basis. There's different types of Regtech, subtech solutions. In terms of manually inputted, it depends, again, on how the Regtech and the subtech solutions have been built up. So ideally, you want to automate as much as you can in the solution. So you would be using machine learning algorithms, which have learned how things are done, which allows you to a certain level of automation, which means that you need to put less input into that. Now, you might have some solutions which act as you said, because Regtech and subtech is part of the two sides of the same coin, you might have some solutions which act as an intermediary and sort of a platform where Regtech on one side, regulation, where regulated entities are looking at complying with regulations. On the other side, supervision entities regulators are looking at how they can supervise regulated entities effectively. And that could be built in one platform, or it could be built as separate solutions. What we do know is that Regtech solutions, companies which develop Regtech solutions do also tend to develop subtech solutions as well, because they understand both sides of the argument. They understand both sides from the regulator's perspective and the regulated perspective. So we do see solutions being developed to both. I think going forward, you will probably see more cohesion between the two, where it involves communication between between the regulators and the regulated entities. But then, of course, Regtech can be used for other things, such as customer onboarding, customer risk management, which is more around internal processes for the regulated entities, more so than the communication with the regulator. I hope that answers the question. Any other questions, Maha?
Yeah, sorry, we're just breaking, that's why. So another question would be, the future is likely to adopt the blockchain technology, which will keep transparency in every activity. Will the increasing investment in Regtech and subtech be valuable in the future?
Yes, so the short answer is yes. So blockchain is very much a game changer in terms of, as you said, transparency, security, viability. The distributed ledger, the blockchain, is very much how we use that. It's a good way of using that. It's more a case of the use cases for blockchain related to Regtech and subtech. That's where I think we'll see some interesting ideas. The other aspect of the blockchain is it's only as good as the information in and the information out from the blockchain. So whilst the blockchain, for example, cannot be broken and it's got the level of trust, if the data being fed into the blockchain is wrong, or the data coming out from the other side will be wrong as well. So it's not necessarily just about using the distributed ledger technology. It's about having the infrastructure in place that you can use it in the right way, but also that you've got the right infrastructure to maintain the quality of the information going in and using on the blockchain, and therefore maintaining the output from that as well. So I think in terms of Regtech and subtech, we will see more activities around things such as smart contracts, for example. So where compliance can be automated using a blockchain smart contract instead of someone having to manually input things. That's a good use case of how blockchain could be applied. And I'm sure we'll see other use cases related to that as well. But that's definitely an area where I think we'll see significant amount of growth.
All right, thank you, Sagar. So another question would be, how do you see Regtech will impact the new digital banks?
Great question. So the neo-digital banks have a great benefit, right? They don't have that legacy thinking. They don't have legacy teams. They don't have legacy structure. They are literally able to do things on a first principle. They're able to look at a blank canvas and say, if I want to build the best way of doing something of customer experience, if I want to build the best way of developing a savings product, if I want to be the best way of how I communicate with the regulators and respond to their queries, I can build that from scratch. And that's the benefit that neobanks have over the incumbents, is that they can build in processes right now which use Regtech as their default positions, and means that they can move things faster, they can automate things, they can move things, they don't have to hire huge teams of compliance for doing that, because they're using technology where most effectively. So I think it's a big area which neobanks have over the incumbents, but it's also them looking at designing the infrastructure in the right way and making sure that that flexibility is there, that they can continue to update that infrastructure as it's required, to make sure they continue to comply with the regulations in the right way and use technology as most effectively as possible.
All right. So another question would be, how do you know if you should approach SAMA or CMA, or both, when trying to obtain a license?
Good question. We actually, Fintech Saudi, we have a regulatory assessment tool, which you can find on the website. If you go on to the website on the services, we have developed a Fintech regulatory assessment tool where you can literally type in what activities you're involved in. And what that tool will tell you is whether or not you need to be regulated. If you need to be regulated, whether you should be regulated by SAMA or CMA, and then what are your options? So has the regulations actually been written for your activity, and therefore this is the regulation and you can comply with it? Or is it something where you need to go to the Sandbox or the Fintech Lab? So I would definitely encourage anybody, you can play around with the tool anyway, even if you're not looking at a fintech idea, because I think it will give you a good understanding of the logic behind how those activities are regulated. But that's a great tool for anybody looking at trying to understand whether they're regulated, whether they need to be regulated, and if so, whether they're regulated by SAMA or CMA.
All right, great. In terms of credentials, the risk officer working in a traditional bank will be able to operate the same way in a fintech framework.
Sorry, Maha, could you repeat the question? It broke out a little bit.
So in terms of credentials, the risk officer working in a traditional bank will be able to operate the same way in a fintech framework.
Absolutely. The risks are the risks are the same. The infrastructure is the same. There's no if you're a fintech, then you have to comply less, and a bank has to comply more. You are both regulated entities. You're both responsible for people's money. You both have to have responsible actors, and therefore you both need to meet the same regulations. There may be certain differences. So SAMA and CMA understand that fintech companies, they're more early stage, they're startups, they might be a bit smaller, so they may have some flexibility in certain areas. But ultimately, you are still responsible for meeting the regulations which have been set by SAMA and CMA. And therefore, the profiles of the compliance officers in the banks would actually be hugely important to fintech companies, because fintech companies don't necessarily have that compliance expertise that banks have built up over years and years and years and years. So I think fintech companies, it's an area where fintech companies are always crying out for talent around compliance and supporting them with compliance, because they understand it's an area which is super important, but it's also an area where they don't have as much experience as the incumbents do.
All right, another question would be, does SAMA allow foreign fintechs to set up in the regulatory sandbox?
Yes, they do. That is something which, so SAMA and CMA, in fact, both are open to international fintechs to apply for the Sandbox and the Fintech Lab. They would need to, so as part of the application, they don't need to be sort of set up in Saudi, they can apply, but once they start operating within the Sandbox and the Fintech Lab, they would need to have a local base. And that's really important because SAMA and CMA are allowing these fintechs to test with live customers. So they will want to make sure that there is a local base, there's a local operating team. If things go wrong or things need to be changed, then there's a point of contact locally that SAMA and CMA can talk to. So the answer to that is yes, any international fintech can apply to either the regulatory sandbox or the fintech lab. But then if they get their sandbox license or they get their fintech lab testing license, they will need to, as part of the requirements, set up their local entity, and that will require getting approvals from MISA as well to then set up that local entity.
All right, so coming up to the last two questions.
Sure.
How we will make sure to have a full auto journey in fintech, and is there a regulation for it?
Sorry, repeat the question.
How will we make sure to have full auto journey in fintech, and is there a regulation for it?
So there's no necessarily a regulation for automating things, right? Automating things is using technology to replace a manual process which was previously done by humans or wherever else it was done by. So that aspect is not necessarily regulated, but the end goal, the output should still be the same. So if it's a human manually doing something, or it's a piece of technology which is doing that, you would expect to have the same level up. You shouldn't be having a decrease in quality because it's being done automated through technology. In fact, you should be improving it because you're removing human error from the process. So it's not necessarily regulating the automation of things. It's more a case of making sure that there's consistent output, whether that process is done manually by somebody or it's being done from an automated perspective. Now, I think getting to fully automated fintech companies, I can't see that happening anytime soon. There's always going to be a requirement for somebody to check what's happening, to make sure that the right systems and processes, make sure the systems and processes, the technology put in place is working in the right way. So there will always be a manual interference or manual supervision for any of these automated processes. But really, a fintech company is looking to automate as much as they possibly can. whilst maintaining the same level of credibility and responsibility.
All right. Could you give any local or international examples of Regtech and subtech?
Yeah, absolutely. We actually have Mozn, M-O-Z-N, which is our first Regtech company based in Saudi. And they have a really cool solution, which is around being able to check with customer onboarding compliance. So when a regulated entity onboards a customer, they have to do things such as KYC, which is know your client, anti-money laundering laws. They need to check the names of the customers against different databases to make sure they're not on any illegal list. They haven't been called up for doing anything illegal. They're not politically sensitive or motivated. And one of the big challenges or pain points in Saudi is because the way certain names are written in Arabic is different to the ways they're written in English, you could have different variations of the same name. And that's been an ongoing challenge for anybody who's got an Arabic spelt name and written in Arabic, because if you're trying to check that against different databases, if the spelling is a little bit off, it might not pick up the right name. So Mozn has developed an artificial intelligence algorithm, which essentially allows companies to do that. So it's being used by a number of fintech companies and financial services companies to onboard customers with being able to look at natural process languaging in Arabic to be able to check those names in both English and Arabic to make sure to give that extra level of compliance. So that's a great example of a Regtech company, which we hope will expand from Saudi and go global.
All right, Sagar, thank you for the session.
Thank you all for joining. And next week, who do we have next week, Maha?
So next week, we're having insurance and insurtech with Rami.
Excellent. So that's another great session. Thank you all for joining. I'm really pleased with the questions. I'm really pleased with the engagement. Regtech regulation is a super important area. If you want to learn more, we will share some links to some things you can read about in the Telegram group. So please do make sure you join the Telegram group. And we look forward to seeing you all next week for week 6 of Fintech Saudi summer sessions, where, as Maha mentioned, we'll be covering insurance and insurtech. So definitely a session you don't want to miss.
All right. Thank you, Sagar, and thank you everyone for joining.
Thanks, everyone. Take care.